and welcome along to the Property Academy podcast by Opus Partners. I'm your host, Steve McKnight. And today on the show, we're talking about how far through the market downturn are we? And this has been something we've been thinking about pretty recently, Andrew, because if we look at this graph from the Reserve Bank, and you guys on YouTube will be able to see this, you guys on the audio version can't, but let me just explain it to you. We're looking at house prices in New Zealand since 2016, and we've got the Reserve Bank forecast. Now, of course, we don't know exactly where house prices are going to go, but they're thinking that they're probably going to drop something like another 6% from December 2022. Now, the interesting thing is that the current forecast out of our central bank, which employs pretty much between them and Treasury, more economists than anyone else in New Zealand.
Must be a hell of a Christmas party.
Oh, I think it'd be pretty good. You know, people know how to do the up and downs with their graphs. I'm sure it'd translate to the dance floor. And what you can see is they believe about from the top of the market to the bottom of the market, about a 19% drop. Now, the question is, how far are we already through that? Well, we're about 12.5%. So if you think about how much the Reserve Bank thinks we're going to see house prices fall, we've already experienced about 2/3 of the total drop that they anticipate that we will have. Now, one thing that I've been thinking about is, well, what other indicators are there other than this? Because we've put out this graph before in private property, our emails. I think we even showed it in one of our webinars, Andrew. But what other data could we look at to see, well, how far through any potential market downturn we are? And I've come up with this. See what you think about this, Andrew. I'm calling this our property market tracker. And I've got 7 different measures of how the property market is going. So the annual house price change, how high prices are compared to incomes, annual sales, the number of properties that sell per year, the number of properties that sell per 1,000 people, how long it takes to sell a property, and also how quickly house prices are changing per quarter. And what I've done is I've lined them up. So over here is the hottest the market's ever been. So that's the highest annual house price change, and compare that to the lowest house price change, for instance. And what does this kind of show us, Andrew? What are you taking away from that?
So this is showing that we have got the coldest market. Is that what that line represents?
That's what it represents. For you guys listening to the podcast, let me explain this. So we have effectively, over the last 12 months, gone from the highest annual house price growth we've ever seen. So pretty much the fastest house price growth we've ever seen, about, oh my gosh, 27%. And now we've got the fastest house price drops we've ever seen, about 10% year on year. And the reason I've put this tracker together, and we'll release this as part of the podcast, we'll put it in the show notes or something like that, is that we have seen a massive change, about a 37 percentage point swing from massive house price growth to massive house price declines.
So let me get this right. So 100, is that the maximum that any of these things can score?
That's the fastest that house prices have ever grown, or the most annual sales that have ever occurred in New Zealand.
Right.
And 0 is the lowest. So this is a way to try and visualize how quickly house prices have changed, or where we kind of sit across a range of measures. Now, let me put this into perspective. If we look at annual sales, this is where it gets really interesting. So over the last 30 years in New Zealand, we have had on average about 82,000 properties sell per year. At the peak of the market last year, we were selling about 100,000 houses a year. So the average, 82, we were 18,000 houses above that.
When was the highest before that?
Oh, that would have been April 2004. We sold 122,000 houses.
18 years ago.
Yeah, so 122,000 houses, ballpark, within 12 months, really quick. Well, now, today, we're at 68,000. So we are well below average. Now, again, the reason I want to show you this is when we were at the peak, we had quite a far way to fall in terms of house price sales and house prices before we hit the bottom of the market. But my point here is that we have fallen so quickly that we are well below averages on most of these measures. That's why I put this housing market tracker together with 7 different measures to show that, hey, look, we have moved so far from a very hot market to a very cold market. And if you look at the quarterly house price change compared to the prior quarter, you can see that the housing market momentum has actually improved. We'll come back to that.
I've got a question.
Yeah,
go back to your graph.
This one.
Where the arrows are positioned, does that mean any difference, or is that just aesthetically so you've got them all fitting in there?
What do you mean?
So take the second one down, prices versus income. The line starts at 80%.
No, that's all intentional. So it shows that 12 months ago, the house price to income compared to where we'd expect it to be was really bad. It was about in the 80th percentile,
Yes.
and now we've moved down to about the 27th percentile.
Gotcha.
So now we are below the midpoint in terms of what we would expect house prices to incomes to be.
Okay.
There's
I
a bit of
understand.
number crunching here, but I'm trying to keep it quite simple. One other thing that I'd like to mention, though, is back at the bottom of the market in February 2009, we sold about 53,000 houses a year. And again, I said we're about 67,000. But what's changed between 2009 and 2022, Andrew, in terms of the country?
Oh, I was going to say the amount of wrinkles that are on my forehead, but number of people.
That's correct. So one thing that I wanted to look at as well is, well, how many houses are selling per 1,000 people? Now, on average, per year, about 20 houses or 19 houses sell per 1,000 people. So if you're in a tiny town like Manaia, for instance, which has about 1,000 people, I always talk about Manaia on this show.
I wonder if we've got any listeners. Text in if you are.
Well, hopefully my stepmother listens to it. Annie, I hope you listen. You're a real estate agent. It's part of your professional development. 19 houses per 1,000 people. Now, the worst that we ever saw in New Zealand was about 12.8 houses per 1,000 people. We're currently sitting at about 13.7.
Wow.
So we're very close to the minimum point where we've ever had the fewest number of houses selling in New Zealand compared to the population. Now, again, why am I showing you this? Well, I'm trying to give you a sense of how hot or cold is the market compared to other housing market downturns. Now, of course, we might see that number track below the previous minimum. I mean, just because in 2009 we saw that, oh, wow, that's the fewest houses ever sold in New Zealand's history, 12.8 per 1,000 people within the country. Well, we might see that ourselves go below that, but we're very close to it. And so I'm trying to look at a range of indicators to see, have we seen significant shifts in the market to say, hey, it's got really cold, we might be nearer the bottom. And I don't want to look at just pricing data.
Well, pricing data is probably going to be the thing that we see change last, right? By the time we get data on that, it's too late for that to be the bottom of the market.
It'll be part of that, but the housing market isn't just about prices. And of course, as I did that big rant a couple of episodes ago about what data do you look at, and I'm trying to say, well, let's look at a range to be able to figure it out. When I was looking at this, how many houses are selling, and say, actually, do you know what? It's pretty near the bottom of previous market downturns. That starts to build a picture when I then look at the Reserve Bank forecasts and see that actually they're projecting that we are still going to see falling house prices, but at a slower and slower rate. When I marry that up to, well, how many houses are selling? Actually, very, very few compared to historically. Okay, what about how fast houses are selling? Well, actually, it went from really fast to, just above the midpoint. We've seen so much shift over the last 12 months that I think that's what sometimes gets lost when you are reading, say, a New Zealand Herald article or a Stuff article. And I don't mean to hate on the mainstream media. I just wish it was a little more in depth sometimes. And I think you can read, oh, well, house price is down 10%. Oh, well, it's going to continue. It's very, very bad. Oh, it's going to keep going down. Well, most of that decline that we were expecting has already been and gone. It's the same thing when we look at interest rates. The Reserve Bank, yep, they're projecting another 1.25% increase in the OCR, but we've already had 4%, so we're already about 75%, 3/4 through that tightening cycle. And so that's the key thing I'm trying to warm people up for. Not telling you that the bottom of the market's here today. That's not my point. But I'm starting to look at a range of data that suggests we might be near that turning point. We are certainly in the end game of falling house prices. And we see that not just in terms of how house prices are moving, but also within that sales data. We see it within the how long it takes to sell a property as well.
I do think this is one that you will want to watch the YouTube video for, because these graphs that you've started really getting into your graphs recently. He's discovered this data wrapper, and it's basically, he spends more time with data wrapper than he does me now because he's busy creating these graphs, but they are really, really good. We use all of these graphs for our private property emails. So if you don't subscribe to private property, we'll put the link in the show notes for that as well, because it really helps see the trends.
And I think the reason why you want to look at a lot of these is just to realize, look, we did have quite a way to fall last year when we hit that peak. But what's going to surprise you is just how quickly the market has changed. And you want to look at the most current data to say, well, where are we within that market? And do you know what? If you said, yeah, we're about, say, 10%, maybe 15% under the long-term average in terms of how many properties are selling, bearing in mind that the population in 1992 was significantly lower than it is today. Then you adjust it for population. You say, well, we're well below average. You know, it's quite, there's very few properties actually selling at the moment. Maybe that suggests that we are coming to that end of that, or that we are significantly through the downturn. And so what I'm trying to get across is that the downturn started 12 months ago. We've seen a furious drop of about over the last 12 to 13 months in the housing market. And you know what? I don't think that we have a significant amount left to fall. Even if we look at the Reserve Bank's own forecast, we're 2/3 through those house price declines. Right, let's wrap it up there, but please don't forget to rate, review, and subscribe to the podcast. Really does help us get the message out to more people. And hey, if you want to sign up for Private Property, Andrew's weekly newsletter, then the link is down in the description, or just go to opuspartners.co.nz. You'll be able to sign up there. Thanks for listening to the Property Academy podcast. I'm your host, Steve McKnight. I'm going to be back here tomorrow with even more daily strategies, tactics, and insights to help you get the most. Until next time.